Hello and welcome to Portfolio Matters Share Talk. In today's episode, we will be discussing Afritin, which has a tin, lithium and tantalum project it is developing in Namibia. But before we get into it, I will read the disclaimer. Everything discussed during the Portfolio Matters podcast is for informational purposes only and should not be considered as investment advice. Listeners should be aware that we will be discussing securities that we own or have financial interest in. Please do your own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. Full disclaimer can be found at the end. This is the tin price, which we have been discussing regularly in the weekly updates. And it's had a very strong year. And if you look at it on a longer time horizon, it's at an all-time high by a decent margin. Now, the question then becomes, are there any tin investment opportunities? And actually, there are only a few. There are only 3 listed tin miners. And Afritin is the one listed in London, and it has got a very interesting project in Namibia where it is reviving abandoned tin mines and diversifying into lithium and tantalum. Okay, so it's listed on AIM. It's got share price about 7.2p, market cap of 82 million, and a small cash of 6 million. Historic revenues are fairly minor because they are in the process of developing this project. So last year they had revenues around 5 million. Okay, in summary, I'm going to say that this is a really interesting project with a huge resource. They have quite a large acreage of historic mines. So their acreage includes a number of historic mines, many of which were previously abandoned when tin prices collapsed in the early 1980s. And they have recently found spodumene, which is the lithium mineral used for the extraction of lithium carbonate or lithium hydroxide for battery metals. And if they can turn that into a commercial proposition, that could also add a substantial revenue stream. So where they are currently is they have a pilot plant up and running, which is profitable and which they intend to increase in size by about 67% cut in this year, starting in Q2. But so far they have offtakes agreements for the tin and the tantalum, but not for the lithium. And the lithium they are producing as a byproduct of tin mining is not spodumene, it's petalite. And petalite trades for much less than spodumene. So the open question is, what are they going to do with the lithium? If they just sell it as petalite, that will go into the glass and ceramics industry for about $500 a ton. If they can create spodumene, and you can create spodumene from petalite, then 6% spodumene concentrate trades for $2,500 a ton, and that would be transformative. Although the company is profitable on phase 1 development, and the phase 1 pilot scheme is going to be expanded by 67% in this year, all the upside comes from phase 2 development, which aims to produce around 10,000 tons of tin concentrate per annum, or around 6,000 tons of tin. But that is up to 5 years away and will require $200 million of capital. So in summary, I like this, but I don't think there's any urgency to get involved. And also, I am very worried about the macro environment. Afritin mines tin at a concentrate in the ore about 0.15%. So that means moving vast quantities of rock to get out small amounts of tin. And you'll be aware that we are currently suffering an energy crisis with diesel in particular in short supply after the Russian invasion of Ukraine. And today, the UK government talked about the fact that diesel in the UK could hit £3 a litre. It's currently about £1.50, and it may have to be rationed. Well, Afritin are going to be moving vast quantities of rock around their site and using large amounts of diesel. So I would be wary of buying them now in the current macro environment, and also would like to see an offtake agreement for the lithium before I got involved. So this is the share price, and if you bought it at the COVID lows, you would have done very well indeed. Okay, let's talk about tin. Well, tin, it turns out, is very rare in the Earth's crust. So iron has an abundance of about 56,000 parts per million, carbon about 200, copper 60, lithium 20, and tin 2.3. So cobalt is over 10 times more abundant in the Earth's crust than is tin. So tin is rare. And tin is used in a lot of applications. This diagram is from the Tin Council. But what has really driven the bull market in tin is the move from lead solders to lead-free solders. So lead solders used to contain about 60% tin. Lead-free solders can contain about 96% tin. And the electronics industry uses vast amounts of solder. And this is a chart from Wood Mac, which shows the metals that are expected to be most impacted by the movement to new technologies. And you'll see that tin is number one. The tin supply is small and it's used in a lot of high-tech materials. This is output, and you'll see that it has stalled in recent years. A lot of supply actually comes from Indonesia, and a decent chunk of that is actually mined offshore. So during the monsoon season, the waves are too high to dredge up the ore. The biggest producers are Indonesia and China is a net importer. And the World Tin Council is forecasting a widening deficit. Now, according to Fitch, tin should be in surplus with a deficit forecast for later in the decade. But from the tin price, we can see that that surely is not true, that the tin market is already in deficit, and that suggests that the tin price has nowhere to go but up, because demand is expected to keep on growing. In our earlier chart, we saw that tin was currently trading around $44,000 a ton. Well, Fitch are forecasting that it will stabilize around $30,000, which would still be much higher, 50% higher than its pre-COVID levels. Now, lithium has been in an even more extraordinary bull market. So pre-COVID, it was trading at about 50,000 yuan per ton. That's for lithium carbonate. And it's now trading at almost 500,000. So it's gone up almost tenfold. This is for battery quality lithium carbonate. And battery quality lithium carbonate is mainly made from spodumene, which Afritin have recently found within their acreage. So spodumene 6% concentrate is the standard commodity contract. And this is from their 2nd of March update this year, where they announced their discovery of spodumene here on the map, bottom left, which is not very far from the processing plant. Although they found the spodumene from surface sampling. So they would need to do some drilling to determine the quantities they have. This is petalite. Now, petalite are what Afritin have as a byproduct of their tin mining. But petalite is mainly used in the glass and ceramics industry and sold around $500 a ton. Now, you can turn it into lithium carbonate and spodumene, but you need to roast it, and it's a more energy intensive process. So question is, what are Afritin going to do with their lithium? Are they going to try and invest in a processing plant to turn it into spodumene, or are they just going to sell it for $500 a ton as petalite? So this is a diagram which shows you the processes by which you can turn any form of lithium mineral into either lithium hydroxide or lithium carbonate. And petalite is here top left, and you can turn it into beta spodumene, but it requires substantial pre-processing. So with spodumene prices, spodumene 6% concentrate, trading at 5 times the price of petalite, it would seem that there'd be a compelling case for trying to process it into spodumene. Okay, tantalum. So tantalum pentoxide trades at about $158,000 a ton and is mainly used in electronics and medical implants because it is almost entirely inert in the human body, and so is used as a plating for medical implants. And this is long-term share price in dollars per pound, and Afritin have an offtake agreement. But when we see the revenue chart, tantalum is only ever going to be a marginal contributor to the revenues of Afritin. Okay, so going through its assets. So they are all in Namibia, quite close to the coast. And Namibia is a stable jurisdiction. And its main asset is the Uis mine, Dutch. I hope I'm pronouncing that correctly. And this is an old mine. So it was discovered in 1911, and it was developed as the largest hard rock tin mine in the world. But it then ceased production in 1990 as a result of low tin prices. And Uis contains rare metal pegmatites, lithium, cesium, tantalum. So Uis is here. It's the red bar here. And this is a cross section of the ore body. So it goes, it's being mined on the surface with an open cast pit, but the ore body goes deep. So frankly, there's an absolutely vast resource here. And this is the concentrations of tin within the ore body. So the maximum is about 0.5%. So you need to move a lot of rock to get out your tin. And this is the tonnage curve. So you have a lot of tons of low-grade ore and negligible tons of ore above 0.2% concentrate. This is the mine plan. It's going to be a vast open cast pit, and as you go deeper, you are going to have an increasing strip ratio. You have to remove all this waste rock to get to the ore body. But if we look at the resource, you'll see it contains around 81,000 tons of tin. And bear in mind that tin is trading at $44,000 a ton. That is an enormous amount of value in the mine if it can be successfully extracted. In addition, there's around 5,000 tons of tantalum and around 82,000 tons of lithium oxide. So currently they have a pilot plant in operation, which is profitable and produces around 720 tons of tin concentrate per annum. And in phase 2, they're hoping to increase that to around 1,300 tons per annum. And it's profitable just on the tin alone, but this year it is hoping to start selling the tantalum. Okay. Another asset it owns is Brandberg West. And so this is a photo of the old mine workings, and it was in operation between 1946 and 1980. And it's a big license area of 35,000 hectares with a historic open cast mine, which was operated by Goldfields starting in 1957. And it was a tin tungsten mine. Its peak production is in 1978. Now, some of the drill results have been really extraordinary. So bear in mind that US has tin concentrations of 0.15%, while some of the drill results at Brandberg have been vastly better. So one of these cores had tin concentration of 28%. Absolutely amazing. Then there's Nines, I hope I'm pronouncing that correctly, a historic tin and tantalum mine, which has mineralogy very similar to US and is only about 36 kilometers away. They're at the stage there of just mapping it up and firming up the resource. Then there's B1 and C1, which are two further pegmatites with similar mineralogy to US and around 10 kilometers away. So they've got vast resources. That really is not the problem. Okay, so a history of Afritin. So in 2017, Bushveld Minerals required 49.5% of the US tin project for 650 grand sterling. It was then spun off into a separate company, Afritin, which is listed on AIM in November 2018. And the proceeds from the IPO were used to purchase the remaining 50.5%. Now, Afritin currently have 85% interest in the project, and 15% is held by the Small Miners of US, a not-for-profit company operated under the auspices of the Ministry of Mines and Energy in Namibia. So they only have 85%. And if we go through the share price history, and I'm not going to go through this in great detail because there are no nasties. In the 4 years since it's been listed, it has done regular raisings to fund the exploration and development of US, and nothing of concern. Okay, let's go through a corporate presentation. So the business plan aims to scale up production over the next 5 years. So currently there is the pilot plant, which is operating at full capacity and actually outperforming its nameplate capacity for tin production. In 2022, the pilot plant will be expanded to around 1,300 tons per annum of tin concentrate. But then over the next 5 years, you go into phase 2, and phase 2 is a completely different proposition. Phase 2 aims to get to 10,000 tons of tin concentrate. That's 6,000 tons of tin per annum. But that will require around 200 million of development capital. So US is here. Walvis Bay is around 230 kilometers away. Now, their offtake agreement is with Thai Sarco, who transport the tin concentrate from Walvis Bay to Phuket in Thailand for processing. Afritin are saying it costs about $150 a ton to move concentrate from the mine gate to international smelter. Presumably that means to Phuket. So this is an overview of the assets that Afritin own and the underlying mineralogy. So you see here, these are Afritin's mining licenses: Uis, Nines, Brandberg West, C1, and one I wasn't aware of, Goan Tagab. And you'll see that the whole area has loads of pegmatites. So there's a lot of mineralogy. Resource is not the problem. And the aim will be to establish a central production facility and truck in ore from the peripheral licenses. But to reiterate, the ore body at Uis contains a lot of ore at very low tin concentrations. So tin concentrations around 0.134%. So you have to move a lot of rock. Okay, so this year they're aiming to expand the pilot plant by 67%. And in November, they agreed a 4.5 million bank loan with Standard Bank of Namibia to fund it. And pilot petalite concentration plants expected to cost 2.2 million. But then it will not be producing petalite for sale. For the first 6 months, is expected to operate just producing bulk samples for marketing in order to try and get an offtake agreement. And I think that Afritin will be substantially de-risked once they get that agreement, or even better, if they can find a way of converting the petalite into spodumene, which would mean potentially creating their own conversion plant. As part of the expansion process, they are developing a tantalum separation unit, which will cost just 300 grand and will process all of the tin concentrate stream. So they have an offtake agreement for the tantalum, and that should start adding to revenues within the year. And as the plant gets up and running, the all-in sustaining costs should steadily fall to around $18,500 a ton with phase 1 expansion, according to Tamasis. Okay, so this is phase 1 only production, and you'll see that it reaches a steady state in around 2024 of around 1,300 tons of concentrate per annum, which is about 900 tons of tin. And tantalum would produce about 13 tons per annum. So this is from the last quarterly production update, 15th of December. And the tin production actually exceeded nameplate capacity by 26% due to continuing process improvements, which is quite impressive. And there was a 22% fall in the all-in sustaining costs. So all good news, but it's a pilot plant. Absolute production is small. So phase 2 expansion and the whole bull case for Afritin based on phase 2 will cost about 200 million and take up to 5 years. But it will then aim to produce 10,000 tons per annum of tin concentrate, 350,000 tons per annum of lithium concentrate, petalite, and 1,000 tons per annum of tantalum. However, these plans have not been updated since the discovery of spodumene. And spodumene would be mined separately and could be an additional resource that is not accounted for by this. But based on existing plans, and existing plans are for production of 350,000 tons per annum of petalite, Tamasis expects that after byproduct credits, Tamasis expects the all-in sustaining cost to fall to around $6,500 per ton in phase 2. So that would provide very large profit margins for the tin. We looked at it that way. The forecast is, if everything goes to plan, tin production would reach 6,000 tons by 2026, and tantalum would reach about 100 tons per annum. The petalite is forecast to be 38,000 tons per annum in phase 1, rising to 510,000 tons in phase 2. And we have as yet no plans for the spodumene. And remember that they need to do some drilling and firm up the spodumene resource before we have any idea of what they intend to do with it. So this is a bar chart of the largest lithium deposits in the world, and US is the 4th largest in terms of contained lithium oxide. This is the expected revenue pie chart, and you'll see actually a lot of the revenue is expected to come from the lithium. The tantalum is going to be all marginal, 2%. So a lot depends on getting an offtake agreement for the lithium, for the petalite or the spodumene. It's got good infrastructure in an area with few environmental concerns. Okay, let's look at the board. So this is the board, which they claim are world class. And the CEO is Anthony, I won't try and pronounce that. So he originally came from Bushveld Minerals, and he was there for 10 years. And then prior to that, actually ongoing, he has his own investment company responsible for the establishment and project development of a number of junior mining companies across Africa. So he developed Bushveld Minerals and also Lemur Resources, although you'll be aware that Bushveld Minerals bought Lemur Resources, and in summary is an African mining entrepreneur, and his chief focus is currently Afritin. So quite an impressive individual. Now, the chairman, though, is Glenn Parsons, and I looked him up on his LinkedIn, and you'll notice he is chairman of Afritin, but he doesn't bother to mention that on his LinkedIn. How committed to the company is he, we ask? And one of the non-execs is Terence Goodlace, who's the former CEO of Implats, Imperial Platinum, and was the COO of Goldfield. So, and he is now sharing his expertise with lots of junior miners where he is non-exec. Okay, let's look at the shareholders. And there were actually no really large shareholders. The biggest ones are wealth managers, and it's noticeable that Bushveld Minerals appear to have sold their holding. Okay, let's look at the offtake agreements. So the tin offtake agreement has been signed with Thailand Smelting and Refining Co., TASARCO. And as we said, the concentrate is shipped from Walvis Bay in Namibia to Phuket. And the Afritin estimate the transport cost is $150 a ton. Now, the agreement says that TASARCO will facilitate the shipment of Afritin concentrate to Phuket. But my reading is that Afritin are responsible for the cost, because TASARCO, according to the broker Tamasis, pay around 95% of the tin in the concentrate. And frankly, I just don't think they could do that if they were also paying for the transport from Walvis Bay to Thailand. But anyway, 95% is a very good payability, I think. So one thing that's not mentioned is advance payments. Thankyou seem to be to pay on receipt of the concentrate. So that means there's none of the adjustments between preliminary payments and final payments you find from other miners, which makes analyzing the accounts slightly easier. But there are cash flow implications because it takes longer for Afritin to receive the money. Now, in February 21, they've signed a tantalum offtake agreement with Afrimet Resources, a subsidiary of a Swiss company, Vanomet. Afrimet will pay the average of the tantalum price over the previous 2 months minus $1 a pound. The current tantalum price is about $60 a pound. And in this case, they'll make a provisional payment of 90% of the value of the tantalum when the concentrate is delivered to Walvis Bay, and then pay the final 10% plus or minus adjustments when the tantalum is delivered to the customer. But we have no offtake agreement for the lithium as yet. Whether they sell the lithium as petalite or as spodumene is crucial. They can somehow find a way of transforming the petalite into spodumene that would massively improve the economics. Okay, forecasts. Now, the investment case for Afritin really relies on the phase 2 expansion, which is a long way in the future. And here I have just taken the numbers from Tamasis. You'll see that they're forecasting in 2026 revenue would be around 250 million per annum sterling, leading to net profits of about 80 million, which is equivalent to the current market cap. So if they can successfully execute all their plans, and the 80 million profit number assumes that they are just selling lithium petalite, spodumene would be a significant step up, then the shares on a future PE ratio of 1. So there is a lot of value here. But if we just look at the profitability of operations as they are now, the pilot plant, and I did this a few days ago when the tin price was actually about $51,000 a ton. I assumed 48,000, but it's since fallen to 44. But if we use a tin price of 48,000 and assume 45,000 after Thankyou have taken their 5%, then you get to an ongoing profit of about 4.2 million a year, putting the shares on a P ratio of around 20, which is not cheap. You'll see that there are quite a lot of deductions. There's a royalty on all production of 3%, and then there's tax of 37.5% in Namibia, and then there's minority interests of 15%. But then if we look at phase 1 expansion coming this year, it starts to look a lot better. Once the phase 1 expansion is complete, profits should rise to about 11.3 million pounds per annum. So what's that? PE ratio of 7. That looks right. But moving on to possibly the most crucial part of the analysis is where are we on the mining life cycle chart. The phase 1 operations are here in the process of starting up, but phase 2 is up to 5 years away and is very much in the feasibility and development stage. So hopefully as phase 2 moves into actual construction and development, then Afritin will start to create serious value. But notice the timescales involved here. So development startup where the serious value is created, that is 3 years. Investors don't have the patience to wait 5 years. They will start to pay attention when phase 2 is nearing completion, i.e. 2 to 3 years away at most. So finally, on to positives and negatives. Well, positives. This is a huge resource. It's I would say there's no worries about mine life. Tin is in a structural bull market, and there are very few listed tin miners. And lithium is in a structural bull market, and this is a globally significant lithium resource. So in terms of the resource, there is a lot to love here. So both tin and lithium are very valuable at the moment because they are rare, and the prices are very high. Once phase 2 expansion is complete, they should be earning around £80 million per annum, which is around the current market cap. So on that basis, if they can execute plans, the shares look quite good value. And that assumes they're just selling petalite. If they can sell spodumene, there's potentially a lot of upside. Negatives. Well, sadly, there are a few negatives. Number one, for me, I'm afraid, is the macro environment. There's a lot of uncertainty in the world following the Russian invasion of Ukraine. There are huge supply chain disruptions, and I fear there are early signs of stress in funding markets. So the war in Ukraine is going to create a huge amount of disruption to the world economy. I expect the world economy to slow, and so that will have knock-on effects on the prices of all commodities. And US mine has very low grades of tin. It's about 0.15%. So you may have to move a lot of rock, and that requires a lot of energy, and particularly diesel. And the supplies of diesel have been disrupted, and diesel is expensive. So the danger is that profit margins get squeezed, certainly in the short term. Other negatives, Afritin is currently only selling the tin. It has an offtake agreement for tantalum, but that's relatively marginal. So as we've seen in the long term, tantalum will only be about 2% of revenues. The big thing is it has as yet no offtake agreement for the lithium. And lithium should actually be the majority of their revenues. And to me, Afritin will be substantially de-risked once we know what the offtake route for the lithium is. And on phase 1 alone, Afritin is fully valued, essentially. All the upside is from phase 2, and that is 5 years away, will require $200 million of capital. And how will they raise the 200 million? Will that involve a dilutative share placing, etc.? There's quite a lot of uncertainty. Lots can happen in that 5 years. So in summary, I think Afritin is really interesting, but I'd be wary of buying it now on the back of the macro environment, but also I would like to see a lithium offtake agreement. And all the economics are based on phase 2 expansion, which is up to 5 years away. This year, past year, has been a big learning curve for me doing this podcast and getting a lot of interesting feedback from our Discord. And one thing it's really taught me is the accuracy of the mining life cycle chart we showed earlier. And essentially, we need to get into these development projects at the right time. And phase 2 development at 5 years away is a bit too far. I will be watching Afritin and looking to get in once the lithium offtake agreements have been signed and the phase 2 expansion is only around 2 or 3 years away rather than 5. Okay, I think that's it. Please, can you press like and subscribe to the channel? If you are new to Portfolio Matters, our main output is the weekly review of world markets and the macroeconomy, and please take a look. In the meantime, it's goodbye from me, Keith Jordan. Goodbye.
Full disclaimer. The material and information contained in this podcast is for information and entertainment purposes only and should not be relied upon for making a business, legal or any other decision. We may own or have a financial interest in any securities mentioned. Listeners should conduct their own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. Whilst we endeavour to ensure that the information presented on the show is correct, we make no representations or warranties of any kind, express or implied, with respect to the podcast and website or to any information, products, services or related graphics discussed or presented in the podcast or website. Any reliance you place on such material is strictly at your own risk. You are solely responsible for the investment decisions you make. We will not be responsible for any errors or omissions in the podcast or website, including in articles or postings, for hyperlinks embedded in messages, or for any results obtained from the use of such information, nor will we be liable for any loss or damage, including consequential damages, if any, caused by a reader's reliance on any information provided by the podcast or website. Please do not listen to the podcast if you do not accept self-responsibility for your actions.